Hey everyone, quick disclaimer before we get into today's episode. Nothing said on Bell Curve is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely our opinions, not financial advice. Our guests and I may hold positions in the companies, funds, or projects discussed.
All right. Happy Friday. Post DAS day. What's up, Mips?
How are you feeling, buddy? You get some
Good.
sleep last night?
Yeah, a little bit of
feeling
sleep.
rested?
Yeah, a little bit of sleep. How we doing?
I'm doing great. Yeah, what a
Good.
week. What a
Did you go
week.
to the March Madness celebration last night?
You know what? I actually missed it.
Oh, shame on us. I didn't
I
go
know.
either.
Yeah, I ended up I went to there was a super state event. I know you were there. We were there at the beginning, and I ended up staying there decently late, but might have had a
Nice.
couple of whiskeys and yeah, ended up staying longer than I thought. But yeah, it was a great,
As one does at the end of a good event.
yeah,
Good DAS.
really good DAS. Yeah, the vibe is just so polar opposite to, I mean, a lot of the sentiment in the industry, especially just going to some other industry conferences, which, like ETH Denver was a completely different story. And that has nothing to do with the organizers of ETH Denver or anything like that. It's, usually conference organizers get blamed or, kind of praise dropped on them based on stuff that's roughly out of their control. But I cannot tell you, we opened up talking about this at DAS, the divergence in sentiment in between different parts of the market. It's pretty unlike anything I've ever seen. And usually you have the natives in the space who are all bulled up and excited and building cool stuff. And that corner of the industry is a little bit in the gutter at the moment, or just feeling down. And the institutional corner, which is usually much more measured and, long-term oriented, they are like coming out of their shoes excited. So
The most excited we've ever seen them, I would
yeah,
say.
totally.
There's a real divergence between since we started Blockworks, we're coming up on what? This is 7.5 years now. The crypto natives were always excited, trying to get the institutions to come in and try to get them to come to the events, sell some things to them. And now the institutions are more excited right at the same time that the crypto natives are getting exhausted.
It's fascinating. And
Yeah.
yeah, it might actually be worth doing a little bit of a history of this event because, a lot of people, I got a lot
Yeah.
of questions like, oh, we finally have this institutional conference and we've been doing this for 6 years.
That both made me so happy and so frustrated. I got that so many times. They're like,
I know.
so many people are like, yeah, great. You guys are finally doing an institutional event. I was like,
Dude.
oh, if only you knew the trials and tribulations that went into getting here.
Oh my God. I mean, DAS was the first big bet the farm event that we did at Blockworks.
Yeah. The first day. Okay, so Mike and I started Blockworks December of 2017. 2018, we were just hosting these kind of, what do you even call them? Happy hour
I think you can
networking
call them
events.
happy hours. Yeah.
Yeah, happy hours, I think we can call them.
Yeah. They were 3
Sophisticated
hours
happy hours.
after work. Yeah. Drinks, like maybe one talk or something like that.
One
And
panel. Yeah, one panel. And they'd usually be 6 to 10 p.m. I think our budget for each venue was somewhere between $5,000 to $10,000.
something like
We would usually do them at this like loft area in Chinatown
Chinatown. Yeah.
where the elevator worked half the time. And somehow it always rained on the day of our events. So that was 2018, and then we hired this woman Julie Muroff, who's our still our head of events. We're so lucky to have her, and
Mhm.
she basically brought this idea. She said, "Look, to be in the event," and she had built and helped sell to, I think, events businesses to Informa, it's a big events company. She's like, you got to go really big to do events, and she put this budget in front of Mike and me to do an event in 2019. And remember, our events were like, I think we would spend somewhere between 5 to 10K, and top line would be like 15 to 20, maybe.
Yeah, it was to give people a sense of the numbers here. So we started doing this in May of 2018, really full time. We did our first event in February 2018, but you and I both still had full-time jobs. The first one that we did when we went full-time was May. I was actually the one that we lost money on. So only event we've ever lost
Not
money
great.
on.
Not great.
Yeah, like 2 days after quitting our job.
Quit our jobs May 1st of 2018. May 10th, we hosted that event during New York Blockchain Week when that was still going on.
Yeah.
And we
Brooklyn.
whiffed.
Yeah.
Yeah.
But the revenue for the entire year was about 200 or 220K. And Julie put a budget in front of us for $400,000 for this event. And the two of us were too scared to tell her that we couldn't do it. We had no business hiring
It was our
someone
first
as confident as Julie.
real employee, like we should work at real companies. Our first employee was Mike's high school friend. Second was this NYU grad who I think Blockworks was his first job. Shout out Rito. And so Julie was like our first real employee. So we didn't want to show that like And we were like, Blockworks is a real company, so you got to do real company things, like spend a lot of money on events, not a little bit of money.
Yeah, so we went into that year, and keep in mind, let's setting the scene here. The 2018, 2019 bear market was really pretty brutal. That, there really hasn't subsequently been anything quite that bad. It was bad after FTX blew up in 2022, but this was
Like
really like,
1/10 is bad, not like
yeah,
not nearly. I mean, I remember sitting with you having beers in 2019, saying like, if this industry doesn't work,
yeah,
would you work at like Uber or Netflix? Like,
yeah. It got really dark. It was like tumbleweeds proverbially blowing through the industry. It wasn't even, I know people look at sentiment on crypto Twitter today, but at least there's energy there. People are arguing and debating about things. It was just tumbleweeds. Yeah. And so we took this really big bet the farm event on an institutional conference in the form of DAS. Yeah. The budget was twice what we did in all of 2018 revenue.
and the
And,
institutional thing was important because there was already this 800-pound gorilla in the industry, and that was CoinDesk's consensus. And so I think actually still to this day, we have this really strong like go-to-market belief that you can't just try to like attack a market as this like all-encompassing thing. You have to find your niche. And
mhm,
so our niche was the institutions were underserved in crypto.
yep.
And there weren't even like today, it's like, yeah, there's an institutional crowd in crypto, but back then it was like, I mean, you would email 200 people who worked at banks and hedge funds and get like what, one response maybe, and then you'd have to get on the phone with that person to get them to attend the event for free. Like it was but that was our niche. It was really important to have that niche, I think. So that was
Yeah.
May. We set up the event for May of 2019, and we
Mhm.
rented Cipriani, and we're like, look, if we're doing it right, we're doing it right. And you remember Fusion coming in,
I do. I
saved the
do.
day. We
Save
bet
the
we
day.
bet the farm. We bet. I mean, if
Mhm.
if that event didn't work, we bet every dollar in Blockworks' bank account.
Yeah.
If that didn't work, there would be no Blockworks. Like
Yeah.
we just the event had to work, or there would be no Blockworks. And we were coming up against it leading into it, and got some big sponsorships near the end and made the event work, and it was
Yeah.
it was a
Well, that was,
success.
I mean, you brought the, Fusion sponsorship in, which made the event cash flow positive. And it wasn't even massively cash flow positive. We did like a little bit of profit, but we're happy. We were in the game then. And, that's when we learned, Blockworks has been a series of just learning lessons, but definitely scale of events matters quite a bit. But that's what got us into the bigger conference game. So it told us, be niche, like own a niche. And, within that niche, scale up as much as you possibly can.
Yeah.
And so, we had, we've changed our event strategy a little bit over the years, but the next year we started doing
No, no,
DAS and
no. No, no. Then we were like, "Oh my god, these are so good. These are so much better than the happy hours. Let's run it back." So we
yeah, yeah, yeah,
decided to do DAS markets later that year, which was
yeah,
chaos, chaos. And then we are like,
chaos.
"Could we outsource our events?" And so we did like coin alts and other. We hosted multi-coin summit, right? You
Yeah,
remember that? I think in 2019 too.
yeah,
And then we were like, "Okay, actually, there's all this opportunity in London, in Europe." And
hmm,
Asia was like really dead then. So we like never were really even thinking about Asia, but it was like we're like, oh, we could go to London. So we did London, we did DAS London February of 2020. And I remember there were these two Israelis there who were wearing masks. And I was like, oh, a bunch of scrubs. Like they took the Balaji tweet seriously. Like
I remember that too. Yeah, it's
I was
like, what
like,
are you
oh my
people doing
God.
wearing masks?
I
Yeah,
was like, come on, guys, come on. And yeah, month but we basically had another Bet the Farm event planned for New York, which
yeah,
was New York Blockchain Week, May of 2020. We w're all in on this event. By far the biggest event we'd ever started planning. And yeah, obviously COVID hit March 2020. And that was scary because we had basically the economics of conferences are you outlay all this cash up front to book
yeah.
the venue, and you have to book venues way in advance. The bigger the event, the farther in advance you have to book them. So we'd outlaid all this cash, and then we didn't know if we'd get the money, or we didn't know if we'd get the money back for the venue. And there's all these legal terms like, what's the thing in the contract about like,
Force majeure.
yeah,
Yeah. So basically the way that the cash flow profile for conferences, what it looks like is you're deeply in the red until about 1 or 2 months before the conference, and then you're in the green. And what you're kind of trying to line up
You hope
is
you're in the green.
you hope, yeah, you hope you're in the green. But it's like there's a big outlay up front for, venue costs and things like that. And you're gradually, sponsors and tickets are kind of coming in, and you're gradually kind of breaking closer and closer to breaking even. And then, in the 1 or 2 months before you go into the green, hopefully, if you've done a good job. And so, yeah, COVID hit basically right around the time that we were breaking even. And so I don't know if people remember this, but there were all these, this was very controversial from an insurance standpoint, because you actually had a bunch of force majeure clauses. You were specifically, if you had like business interruption insurance, you were specifically protected against a pandemic. But insurance companies aren't set up to pay out every single company in the U.S. at the same time, right? So they literally just couldn't do it. And at that point, Blockworks, something like 80% of our revenue came from
82.
conferences.
Yeah. Yeah.
So yeah, you can. And by the way, people forget this because they just remembered 2020 and 2021. But Bitcoin dropped from something like 9K to 4K in almost 2 days. And so we were thinking this industry might be cooked, but even within this industry, we're in like the worst
We're
epicenter
definitely cooked.
possible.
We're definitely cooked.
And we couldn't even
An
commiserate in
event
person
company
here.
in crypto, how stupid are we?
Yeah, so I actually have to shout out at the time, sponsors. It took us a long time to get money back from the venue, like a year or something like that. And I have to shout out the sponsors of that conference. Actually, BitGo was in particular. I don't want to, call them out in person, but they were really good about renegotiating and turning that sponsorship.
BitGo was the GOAT. BitGo, I
Yeah,
remember Belshi came through and was like, turned my sponsorship into a digital thing. That was, to him, was probably a small thing. I don't know. I remember it was like 30 or 40 or 50K, but for us, it was huge.
massive.
Yeah.
Yeah. And so we basically just grounded out for the rest of that year. We couldn't do anything. That actually was the acceleration of the media part of our business. So editorial was birthed at the beginning of 2021. We launched January 11th or 12th of 2021. That's when we really started to lean into podcasts, and that's when we created webinars, because we literally couldn't do in-person conferences. So we had to.
That was the genesis. That event getting shut down in March of 2020 is why Blockworks is the media company it is today. Because we said, oh my God, never again will all of our revenue be tied up in events. Let's go all in on the digital side too. And so we
Yeah.
spent, I mean, we had no events to host, obviously, because it was COVID. So we spent all of 2020 building the media site, hiring the journalists, building the in-house podcast to launch in Q1 of 2021. And that created Blockworks, the media company as we know it today, right? So back to DAS. So then what did we do in 21 with DAS? Did we do two? We did DAS London and New York, right?
Yeah, and we did that for 2 years. We did London and New York, and then we had a strategy where, we've generally the trajectory of Blockworks conferences has been bigger and fewer, and so we're like, we might be splitting. There's a huge amount of overlap between New York and London, which I don't think is the case anymore. But at the time, the industry was much smaller, especially the institutional part of the industry. So like, we should be consolidating this. And this was in the beginning of 2022, if you remember. This was before everyone found out about FTX, and there were all of these companies that were really interested in spending more time in Washington D.C. then, right? So SBF and FTX were kind of leading the charge here, but it was all the big institutional players. It was the Coinbases of the world, the Circles of the world, the BlockFis of the
Oh, you're
world.
jumping ahead. You're thinking about 20. This is 20. You're thinking later on.
I was, yeah.
Yeah.
This was 22. We were planning, because you have to plan
Yeah,
these
yeah, yeah,
things
yeah. I
2 or
see.
3 years out. And so 2021 was good. It was a good year for institutions. Everyone was
It was
coming in
good.
at that point.
2022 was good too,
Yeah,
but permissionless was so good, right? It was such an outsized success and such a bigger event than we'd ever done. We said, what are we doing hosting these little dinky institutional events?
yeah,
There's
yeah.
no barely any institutions still in the game. We've been doing this for 5, 6 years. It's like no institution still in the game, all in on the crypto natives, permissionless. So in 2023, we said, let's go all in on permissionless
Hmm.
US crypto conference, and we made a big mistake of not hosting DAS,
Yeah,
right?
yeah. Well, what I think we were going to do, we were gearing up. We remember we were going to consolidate DAS from London and New York into DC, and then FTX blew up. That was the plan. And then
Oh, right.
we got it went from companies wanting to be in Washington D.C. to being completely radioactive, and they didn't want to be seen, right? They didn't want to get on anyone's radar because, chances were you were going to get sued or indicted or whatever. And so, yeah, we that was a pretty tough that was a really tough mistake to make, because not only did we then have to pause on having DAS at all, but we had to move it from Washington, D.C., and we pushed it out a couple of months to London of 2024. So there was a big gap in hosting DAS. We had to eat a bunch of event costs, right at a time when, 2023, everyone's revenue fell
Oh,
quite a
this was
bit.
24. We wanted to do DAS in DC in 24.
I think it was around that. It was either end of 23. It was end of 23, and then we pushed into March. But yeah, it was a really costly strategic error. And then we missed the Asia. We underestimated the amount of energy that was going to go into Asia, and we hosted it permissionless at the same time as Token. And people kind of memory hold themselves. Like, Token is a phenomenal event, right? Like, huge success to that team. But they went from something like a 750 person event to a 5,000 person event in 1 year. It was a huge, huge growth. And so, yeah, that was a very tough year for us on the event scale. But
That was tough.
but now, anyway,
2024, then it came back though. Then
yeah,
but we still didn't do New York, right? It was just London. So we
just
did DAS London. And then we'll get forward to 2025 and just our takeaways from this event in a second. But so we did DAS London and permissionless in 2024. Both them went great. And actually, DAS London was our biggest DAS in history, right? We went from having 500 people to 800 to 900 to 1,000 to DAS London had 1,700. I remember it was 1724 because the hotel we hosted at capped out at 1724. We had to cap our registration. And at that point, I think we were like, oh, yeah, DAS is very much back. This is a good event to be hosting. So we said, let's go. If we're doing this, let's go big with it. And so
Yep.
we got basically the dynamics in New York are really tricky because there's only, if you want to host an event over 2,000 people in New York, there are only 3 different places you can do it at. There's either like a Brooklyn warehouse type of vibe, and you have to like create your own space. And it's really difficult. That's Brooklyn warehouse. The other is like the Hilton or the Marriott, and they're just
Yep.
kind of like meh
Yeah.
type of venues.
Yeah.
I don't want to speak too poorly in case we ever do host an event there, but
You're hedging.
I'm hedging here. I'm hedging,
Yeah.
but we didn't. But we were like, if we're going big, let's go big. And then the third is Javits Center,
Yep.
and Javits is like just a massive, massive venue, and we're like, look, do we think, because you have to bet on these things far in advance with events, that's why they're so tricky. And so we said, we think the institutional crowd will be here in 2025. Let's get Javits. And so that's why we did it at Javits this year. And this was obviously March 2025. And yeah, I guess that takes us into this event, unless there's anything else from the lore that you want to share.
No, that's great.
Yeah.
I'm sure people, this is enough of Yam, but that's, we share this story. If there are founders who are listening, there are so many crisis moments. And I think this informs a strong belief that you and I have, that you really only, most of the major innovations or, forward progress in Blockworks has actually come from crises. So the media business, part of our business, really came from a crisis of not being able to do in-person events. And the strategy of Digital Asset Summit was, it went lots of ups and downs, but now
Yeah. So this ties back into the very first thing we are saying. There's all these people at DAS this year saying, oh my God, so good. You guys are finally doing an institutional event in New York. Like, about time you guys did that. And I think every time someone said that to Mike and I, it was just a little pain
I know.
because I'm like, we've been doing this since 2019 and we're idiots. And at some point we just either didn't do it or pivoted to London, which London is great. And we're doing London again this year too. But like, anyways, happy to be back in New York. It was an awesome
Same.
event. So takeaway, so summary of the event, and then we can do takeaways. Summary of the event: it was the biggest DAS in history by a country mile. Right, we had 2,500 registrants, 3-day event, 2 floors at the Javits Center. By far our biggest digital asset summit in history.
Yeah, we had some of the best speakers that we've ever had. Obviously, the headline get here was the sitting
We got the
president.
Don. We got the Don.
The Don. We got the Don. We had Michael Saylor, we had Kathy Wood, we had
Mohammed Al-Arian.
Mohammed Al-Arian. It was just, it was a phenomenal set of speakers, and I think the quality of the attendees. One of the things that I'm most proud about, we used to have all these discussions about, do we want to scale this up to more people because you lose the high quality of attendee? I think we've done a good job of scaling the conference while keeping the quality of the attendees very high and very institutional. And so, yeah, I think in terms of the takeaways for this year, yeah,
The
just
other highlight for me, this is like I got dinner with there was a Galaxy dinner last night,
mm,
hosted by Alex Thorne over there who runs the research arm, and I sat next to Sailor, and he's like, you guys are, it was a machine. He's like, during my talk, I had like 250,000 people watching that on Twitter. And in real time, pictures of me were getting up. And then you guys were clipping it in real time. And then there were news stories about my talk on Blockworks. And that was like, I mean, it has taken us 7.5 years to get to that machine. I feel like every year we have an event, we're like, oh, why didn't the live stream go better? Why didn't we get the pictures up and like faster? So it did take us to anyone building anything else, like it takes a while to get the machine going.
it absolutely does. And a massive shout out to the Blockworks team here. I mean, there were so many people that were involved in that, but
Yeah.
uh,
I think we had
yeah,
40 people on site to make that
yeah,
whole thing happen.
yeah,
All right. You want to start with takeaways?
yeah. So I think I think that it's a really interesting time to be in the RWA and the stablecoin space. That's the most obvious thing. But let's try to dig a little bit underneath that, right? I think maybe you can separate out a little bit stablecoins, the stablecoin story, and the RWA story. And the way that I would differentiate that is there's real organic product market fit for stablecoins, both amongst crypto natives, and the original product market fit for stablecoins was, originally all like the trading pair, the dominant trading pairs was like Bitcoin, Bitcoins to alts, and now it's mostly stable coins, especially on offshore exchanges. And that's mostly a Tether story. And then the USDC story has been basically the same thing, but on US exchanges and then also in DeFi. Right. So there's real product market fit for stable coins as a trading pair, but also just people wanting to hold dollars on chain. Um, we'll get into this, but I think there's a huge amount of demand for issuers. There's going to be a bunch of new issuers that come into the market later this year. Although I think they actually have to wait until this stablecoin bill, the Genius stablecoin bill from Bill Hagerty, gets passed. But there's like a very organic, and there's a lot of stuff on the stablecoin side of things. RWAs are also big, but I think the story there is a little bit nuanced and interesting. And so there's about
Wait,
20.
before we go too deep into RWAs, will you say more about what you mean by the issuers and your thoughts there?
Yeah. So okay, so I think you can broadly break the stablecoin market today into two groups. There's really USDT and USDC, so Circle and Tether, and then there's the more decentralized stablecoin market, so like the USDSs of the world from Sky. And a, a, a big way to differentiate that is how yield is getting passed back to users and how centralized the issuer is, right? So USDC and USDCD are just dollar collateralized stablecoins. So they've got a big pile of treasuries. There's a centralized issuer, and there's an enormous amount of yield that's getting generated there. I think Tether obviously has a much larger market cap than USDC, and I don't have any special knowledge here, but my sense is that they keep more of that revenue, right? So they don't, what I've heard is that Tether doesn't do a lot of like kickbacks to offshore exchanges or anything like that. They're pretty strict about that. Whereas USDC has a very generous revenue share with Coinbase, which is public. So, something like 50% of if USDC is custodied or held on Coinbase goes to Coinbase. It's a very large revenue share. And there might be, certain kickbacks to market makers or things like that. And so I think that there's probably a little bit of pressure on the USDC business now, but either way, these are centralized issuers of the stablecoin. And then you also have more decentralized issuers in the form of Maker, right, where it's a DeFi protocol and anyone can go in there and dump collateral and then mint DAI or USDS. And so that's what I mean when I say issuer. But when you look forward into the future, I think the product market fit is probably on the more centralized issuer front. And so you're going to get a bunch more brokerages. So like the Robinhoods or the Revoluts of the world, you might get banks, right? The CEO of Bank of America, Brian Moynihan, said that he would consider issuing a stablecoin if this legislation gets passed. You might see large asset managers, right? It's anyone that has a large, there's a bunch of new issuers that are going to come into the market. And we'll have to see who's ultimately successful there.
Nice. All right. You're going to go into RWAs.
Okay, so there's about $20 billion worth of RWAs that are issued on chain, like 18 point some as of looking at RWA.xyz. A large part of that is private credit. So I think there's like 14 billion of that is private credit. The rest is mostly treasuries. Now, the caveat to that is that a huge portion of that, some 11 billion, is figure. So that's HELOCs on chain. And
Mm.
there's a little bit of nuance there about whether or not that's actually on chain or not, but skip that. I was reading one of the takeaways that you posted in your thread from Cindy over at Drift. And her thought was that okay, there's product market fit here on the issuer side, so people who are issuing on-chain RWAs and buyers, right? Yeah, exactly. Actually, you want to just read this? Can you just read this
Yeah, I
quote?
can read. Okay, so this is from Cindy, who's one of the co-founders of Drift.
Yep.
Okay, so Cindy said, "It's clear from all my conversations at DAS this week that now is the best time in history to be building for institutions in crypto." And there are a couple sub buckets here. One, on the sell side, so the issuers, the largest financial institutions want to tokenize their own RWAs and they need DeFi rails to create the utility, right? Borrow, lending, trading, vaults, things like that. On the buy side, so the investors, crypto native institutions and high net worth individuals are hunting for yields beyond crypto, especially now that DeFi and funding rates lag the treasury rates, right? So big moves toward higher yield assets beyond treasuries that are traditionally unavailable to crypto users, like private credit, non US treasuries, things like that. She said, I haven't seen so much fervor around institutions and crypto and the intersection there in a while, except this time it's very much becoming a reality.
Okay, wait.
DeFi,
Let's pause
yep,
there for a second because she's got interesting
yep,
takeaways, but I just
yep,
want to
yep.
address that. Okay, on the buy side, I absolutely do see that, and I think
Yeah.
there's early product market fit for protocols like Maker, right? Who it's a net interest margin business, right? So they've got a bunch of depositors that they need to pay some amount of yield out to in the form of the savings rate, which I think now is around like 6 something%, and then they've got a portfolio of assets, right, that are generating yield, and some of that is there's like some non yield generating assets like USDC and their peg stability mechanism. But they've also got, they actually just did their Grand Prix, right? So they've got BIDL, which is signed on, they've got treasuries, but they're going to explore other forms of mostly off chain yield that they're importing. And whatever the net amount of yield that they're generating across their portfolio is, minus what they're paying out to USDS or DAI savings rate holders, is their profit. It's their business for the year. So
Right. And that's
there's a
where
huge
Cindy's spot on, where we'll start seeing things beyond, right? Just kind of the traditional treasuries moving on chain into things like private credit.
Yeah, and actually, Michael Anderson from Framework did a great explanation. There's an RWE, real world energy, like yield being brought on, which I think is super super interesting. But
Mm.
what I still struggle to see a little bit is on the sell side. I don't fully understand what the value proposition is at this point from the issuer standpoint, and I think that this is where it's important to get very specific and realistic here because what people say is, oh, you're immediately opening yourself up to a global market. Okay, maybe. But look, if I'm Apollo, right? So Apollo issued one of their you know, fixed income, funds, right? Like a distressed credit vehicle on chain. And they did it on Solana and Inc. And I'm asking myself, are there really more buyers on chain okay, you got this credit fund, right? You can do it in the off-chain way or the on-chain way. Do you really have more buyers on chain? I highly doubt it. I would be very surprised, right? Apollo has no problem with distribution. Like they have access to
This is exact. Okay, so this thing that Saylor said to me last night. He said, if you can structure yield in the right way for institute, there's an unlimited amount of money in this world for you
right,
off chain. Like there's
right.
an unlimited amount of money with Fidelity and Vanguard and the sovereigns and the endowments and the pensions and the capital groups of the world. There's an unlimited amount of money in the world. You cannot fathom how much money those folks have. And so I agree with you. This is what he's saying. Like you don't need to move on chain to get more capital, basically.
I agree. So why are they doing it? I think this is me completely guessing.
Yep.
I have no insider information. I would guess
Did I just
that
see you wink? Is that a
no, that was not. No, no, no. I did not. So no wink happened there for people who are just listening. But I would guess that there's chains are paying these issuers to issue on chain. I would guess. In the short term, that's what's happening. And there's a huge and that could be anyone from L1s to L2s to interop protocols, right? Like everyone wants to be very close to the issuers. But I think long term, I think what BlackRock and Apollo and whoever is seeing is that maybe in the long term, there is actually validity here to this idea of a global permissionless ledger, right? Like it does actually make sense
Mm.
to me that in the long term, once you break down some of these walled gardens around institutional capital, you could be opening yourself up to a broader market. I just don't think that's the reality today. So if I had to construct a rational argument from the issuer side, say, hey, like this is a better mousetrap, right? Like right now, you have a bunch of assets that exist in siloed databases with a bunch of compliance hurdles around them. We're gonna move these things onto a global, permissionless ledger. Although we'll do a little caveat around permissionless, going forward into the future. And eventually, there's going to be more liquidity here, and everyone's going to move their assets onto this. But in the meantime, it doesn't really make sense. So we need a little bit of a sweetener. And I think that L1s, L2s, interop protocols, whatever, are happy to give them that sweetener. But I basically think that these issuers are yield farming existing protocols today. I think
I
that's the right.
tend to agree. I tend to, yeah.
Yeah.
All right, good takeaways. What else you got?
So one interesting, just a small thing, but I thought it was very cool what Michael and Vance on the framework side of things were talking about with real world, like another form of uh, yield that exists in TradFi that's being imported on chain is an energy derivative. And so there's a protocol, I guess, called, well, I don't want to blow up their spot because they're not quite public yet, but basically there's something called a PPA, a power purchase agreement in the US, where you can kind of go around and put a bunch of solar panels on people's roofs, and where the energy is stored in a battery in their garage. And if you get enough of this energy, you can kind of package it up and then resell it to the grid. And then in addition to that, the US likes this form of renewable energy, right? Because it's solar as opposed to gas or coal or whatever. And so there's a credit that you can get, which actually trades on a liquid market. And then you can depreciate this asset and further generate another form of yield. And so if you actually can bundle up this stuff and coordinate it at scale, you can generate a pretty good yield, which again, you could import on chain. And so I think this is another pretty interesting, there's going to be more experimentation here of crypto people looking to coordinate potentially through DePIN additional sources of yield that you can import on chain. So I think that's a very underexplored, and I know Meltem, she kicked the whole conference off, and she's very interested in the energy space as well and where that intersects with crypto. And so, yeah, I think there's going to be a lot of experimentation around energy based yields and importing that on chain. I think that's
I like
cool.
that. I like that.
Yeah.
All right, I've got some thoughts.
Cool.
Maybe I'll do one of my takeaways right now, which is so I met with a lot of founders and CEOs from exchanges, fintechs, and brokerages. So I met
Yep.
with U.S. exchange founders, Asia exchange founders slash some CEOs, and then there were a lot of actually fintechs and like traditional brokerages, like the
Mm-hmm.
Charles Schwabs and TD Ameritrades of the world there. And so I had a lot of interesting chats. One, so let me I wrote down my kind of takeaways from this bucket of conversations. The first
Yeah.
one is that all U.S. exchanges are racing to offer equities, and we saw this acquisition with that Kraken made of NinjaTrader, and I don't actually know why they made it, but one of my guesses would be because this is part of this big race for U.S. exchanges like the Coinbases of the world to offer equities. They all want to offer equities on chain, and I think there's this idea that the market structure bill will actually come by the August recess, and if that comes, all of these platforms they're all there's a great convergence of these platforms, right? Robinhood fully turns on the crypto switch. Coinbase and Kraken fully turn on the equity switch. And so I think US exchanges are racing to offer equities. I think the Asian exchanges are racing to enter, or in some instances, re enter the United States. So a lot of them maybe were here in 2017, 2018. They got booted. And now I know they are all looking to re enter the US. That's very interesting. I
Mm-hmm.
think fintechs are like I'd bucket this as like the new brokerages, like the Robinhoods of the world.
Mm-hmm.
They're all racing to offer crypto assets, and I'm not talking about Robinhood offering Bitcoin, ETH, and Solana. I'm talking about the top 100. So all the fintechs, all the Robinhood like companies are looking to offer all crypto assets, as many assets as someone like a Kraken or a Coinbase lists. Um, Stablecoin bill, I think people are extra 95% optimistic it'll come by August. 60% optimistic we'll get it in like the next 60 days. Um, Depending on who you ask, obviously. Everyone's thinking about launching a stablecoin. Maybe not actually launching their own stablecoin, but issuing a basically issuing a stablecoin and doing some sort of rev split.
Mm-hmm.
So This could be partnering with USDC and getting more of the revenue. It could be doing like Agora, like a Nick Van X thing, and doing some sort of revenue share. But everyone's thinking about how do they make. Everyone looks at Tether's profits and they say, "I want some of that." Traditional brokerages, TD Ameritrade's, Charles Schwab's of the world, they're all thinking about how do we offer crypto tokens. Market structure bill comes in the summer. That means they can start to hopefully offer tokens. They think, how do they actually do that? And then the last thing is like these exchanges are sitting on a ton of cash, billions of dollars of cash. One of the exchanges I spoke with said they're going to do several hundred million in profit just from their on-chain wallet this year, and that's a side business for them, right? So they're sitting on a lot of cash, highly valued equity. They're all going to use cash and equity for acquisitions this year. So that's what I was like. That's a big bucket of takeaways, but it all kind of falls under this bucket of like brokerages, fintechs, exchanges, and their 2025 plans.
I agree. Okay, let's talk about the exchange bucket here because that's very interesting. For such a long time, people have talked about consolidation on that side of things, and a big part of why we haven't seen consolidation on the centralized exchange portion of things is local regulation and jurisdiction, right? And that gets very complicated, as you move internationally. But Coinbase has started to move international, right? So they have a U.S. or they have an international entity where you can trade. I think perps and they've got a derivatives product, right, that you can trade internationally. And now you're starting to see the Asian exchanges move into the United States. And so there's going to be more direct one-to-one competition. And I think that's going to be challenging for some of the incumbents that might not have a niche carved out, or they might not have critical mass in terms of liquidity or users. But it's going to be very interesting. And there's going to be a lot of competition in terms of product set, right? Everyone wants to be a one-stop shop. So yeah, you want to be able to trade equities, you want to be able to trade crypto. And yeah, it's going to be probably a little bit of a knife fight, I think.
Yeah, I think it's going to be a ruthless year in the exchange space. I mean, if you're looking at the top 10 exchanges on CoinGecko, they're Asian exchanges, right? So they're coming into the US. They have customer acquisition
Yeah,
dialed in Asia, and we'll see if they can replicate that in the US.
I agree. I think the challenge from the US standpoint would be one of brand for Asian exchanges, right? Like
Trust.
trust. Yeah, trust. It's just that's the general perception is that you've been conditioned, especially you've been living in the US, is there's maybe a little shady. I don't know about the risk management practices. There could be weird stuff, around some of these exchanges and their connection to their local government, whatever it is, right? And so I think that'll be the challenge on their standpoint. And then I think from the US standpoint, maybe Coinbase, if I was looking at these exchanges coming in and say, wow, some of these exchanges have much, much more volume and users than I do. So what levers can I pull here to maintain my market share and potentially expand into their market? Right.
Yeah, one thing that could be interesting to watch here is perps, right? Perps are this like offshore trading mechanism, I think, for that hasn't really been in the US because it's not legal.
Right.
And I think maybe the Asian exchanges get more comfortable launching perps in the US, and
Yep.
that pulls market share onto the exchanges who are more comfortable taking riskier bets. Like, I think Coinbase offers 10x leverage or 20x leverage. If you're an Asian exchange, are you going to be comfortable offering 50x leverage or 100x leverage? Are you comfortable offering perps before Kraken offers perps? Those are, I think it's they might be more comfortable pushing farther out on the risk spectrum in order to win some of that market share.
Yeah.
Yeah.
And I think that there's going to be some exchanges that I think I know you've been talking about this, and I completely agree with you. I think this is going to be finally the year that we see some M&A in crypto, and I'd be watching the exchanges in general, and I would see it from all exchanges, right? Because the Asian exchanges that are moving into the US, whenever you're moving into a new geography, it's kind of like, okay, I can either try to land and expand here organically, or I can kind of buy my way in. So I think there'll be some amount of M&A interest on that front.
Okay, I've got a question on this. So the market cycle 2018, 2019, 2017, 18, 19, 20, if you were a founder like us building in crypto, you built a business on the back of equity, right?
Yeah,
BitGo, Anchorage, Fireblocks, Copper, Chainalysis, Amber Data, Kaiko, Blockworks, Dune, whoever. These are like equity businesses. If you join, so all the 2017 founders built their businesses like that. You
yeah,
came in the next cycle, 2021, 2020, 2021, you built token-based businesses. You
yeah,
never really thought about your equity. It was all about the token. And that's been the prevailing, I think, idea of founders is like, oh, if I'm launching a crypto business, it's got to be a token-based business.
Yeah.
Um, if you start seeing acquisitions of these equity businesses and you start seeing fellow founders winning, selling their businesses for 500 million, a billion, 2 billion, and these are equity-based businesses, will we see a new wave of equity-based businesses starting in crypto?
I think so.
Yeah.
Yeah. There's still so many questions around this, and one of the last panels that we listened to at DAS was a really fun one with Blockworks' very own Boccaccio hosting between Hasib and Mike Dudas about whether or not we still need VCs, and there's been all of this discussion about low float, high FTV sort of tokens. I think one thing that's going to happen is building a business that has a token really early stage before you have any product market fit is a real double-edged sword. If you're in a bull market and everyone's kind of buying everything and it's going up, it's a huge advantage to you, right? Because you can essentially offer very non-dilutive but very significant token packages, and get that for use that to acquire good talent. But it feels like that market's never really coming back. We're never just in an up only market. You need to actually perform to make your token price go up. And so if your token price is going down, that is a massive drag on the morale of the company. And so I think what's going to start to happen here naturally is you're going to start to launch tokens just later in the life of a company. I think we're kind of the market's
Yeah.
solution here is just that it doesn't make any sense to me anymore to launch a token before you have a product. There are some exceptions here, right? If you're an L1 or an L2, you might need to do that for grants or whatever. But I think we're going to generally see tokens launch later in the life cycle. And then I think once we start to your point, once we start to see equity M&A happen on the equity side of things and have that be a viable path towards liquidity, then yeah, I think it will shift some things. And I think founders will be like, do I really need to launch a token here? Like, is this worth it? I think.
Is this worth it? Yeah. I mean, Stani, we did this live Empire episode with Stani and Jack from Scale. And by the way, hilarious Jack thing. So we sit down at this dinner and sit down at this dinner and everybody's like, Jason, we got a big question for you. Who the hell is Jack O'Halloran and what is Scale? Because I swear, you know, the way that Blockworks is able to host the Javits Center, which costs millions of dollars to host, obviously we have sponsors. And so, Jack is, Scale is one of the sponsors and Jack was speaking. We said that Trump was going to speak at 10:40, but we were running like 10, 15 minutes behind. So, I think we had like 280,000 people on this live stream waiting, and the conference hall is packed, waiting for Trump to go on. Everyone's waiting for Trump, and meanwhile, Jack is talking about Scale, and apparently there's a big. I don't have a Bloomberg terminal, but there's this like Bloomberg terminal anonymous chat, and the whole chat was just saying, "Who is Jack? Who is Jack? Who is Jack?" There's like hundreds of people. So
Who is Jack?
who is
Question.
Jack? I
I
think Scale got the best deal of the event.
think they got their money's worth. Yeah.
Yeah.
But
Um,
yeah, so I think that part of the reason that you haven't seen M&A up until this point was that there was massive overvaluation. I mean, it's really overvaluation, and unrealistic expectation from founders. And when you were looking at M&A between two protocols that had a token, there were a lot of questions around how you're going to combine these things, and it never really made sense. But I think on everything from the infra side, which infra has been probably overvalued and overinvested in, and you're going to see some consolidation on that side of things, that mostly look like acqui-hires, I think. But then I would be looking towards the exchanges to look at more significant M&A, and there's going to be two drivers of that. One, which is like, look, I got a lot of money in, this is the market to win, and I'm not going to be too stingy here. But then there's also going to be some exchanges which are at risk of getting, I think everyone kind of, this is your make or break time, and you got to do something, right, to make a splash here. And so I think you'll see M&A activity from both of those standpoints.
Yeah.
But and then the other thing too is, to complete the circle about stablecoins and why everyone is so bulled up about these things. There was a really interesting interview that Scott Bessent, the Treasury Secretary, did on All In this week, and I would encourage everyone to listen to it. And connecting a couple of dots here. So at the White House Digital Asset Summit, the slightly lesser well-known Digital Assets Summit, Treasury Secretary Bessent spoke, just a little bit, but he basically said Bitcoin and stablecoins, right? They've been very consistent on that message. And when you listen to his plan and what they're doing globally here from a macro standpoint, it's very, very interesting. I mean, there's basically four big policy levers that they have, right? Which is tariffs, spending cuts, tax cuts, deregulation. So they're actually
Yep.
going with the two growth negative policies right now. Tariffs, right, which is revenue generative, but like not good for private sector growth in the US, and spending cuts. And what the spending cuts are doing is it's most of the growth in the US has been driven like job growth. And a lot of growth in the economy has driven from fiscal spending from the government. So they're bringing both of those two things down, and they're hoping to make it up by deregulating and by doing tax cuts. So they're shifting the growth impetus from the public sector to the private sector. And they're very concerned at this point as well with the amount of debt that the US has, right? And so, part of deregulation, Scott Besson has talked about changing SLR requirements for banks. It's actually mentioned that maybe even the supplementary leverage ratio, even getting rid of that, it sounded like in this interview, that would be that'd be pretty radical. But he thinks they could lower treasuries by 70 basis points. And the other big lever that they have is stablecoins because they're buyers of US debt. And so, yeah, I think one of the interesting ways that you might be able to think about stablecoins are, they're very similar to bank deposits, right? Brian Moynihan, when he was discussing stablecoins, is these are just bank deposits. But the difference is stablecoins are global bank deposits from day one, and they're lower overhead and they're backed by treasuries. And they're kind of a new form of bank deposit, which might make sense for a global population. And so there's this unbelievable product market fit here from, the Treasury Secretary of the United States wants these things because they're buyers of debt. And it actually might make sense for a lot of people globally that want, basically access to US dollars, like a US dollar banking deposit. And the cool thing about this, you can almost think about this as if you wanted to get a bank deposit before, you actually had to have a bank that was domiciled in the United States and had all of this infrastructure built around it. But now you can almost start from the bank deposit and then have a bunch of fintechs take that bank deposit and build services around it. It's an actual money Lego where you can have, real established fintechs build services around these stable coins, which are untethered from any one bank. That is just so freaking cool. So
yeah, it is. It is.
a huge amount of global demand for stable coins. I think I don't know what the play is here. There's a debate about, is Ethereum going to benefit from this, or Solana, or whatever the L1 is that's issued. I'm not really sure about that, but man, I mean, I think I know everyone's bullish on it and it's a consensus bet, but I think everyone's going to get blown away by what the stablecoin market cap goes up to.
Yeah. Okay. I wish I was a better storyteller because I tried making this argument at the dinner last night. And we're talking about the price of Bitcoin. And I was like, look, we've got this stablecoin bill coming. I think this thing comes in the next like 45 to 60 days. I know everyone's thinking August. I think it's actually like way more finished than people think it is. And I think it'll come in the next like 45 to 60 days. And I'm like, imagine what happens to the total supply of stables this year, not even 26, 27. Imagine. So what's the total market cap of stables today? Probably like 220, 230.
Yep. 230 billion, somewhere around
230. Okay. 230 billion. Imagine that went up to 350 even. Imagine bigger. Imagine 500 billion. What does that do to the price of what does that do to the price of other assets in crypto? Like that alone. And we're talking about the price. And so I was basically trying to make the argument like, look, you double the supply of stable coins, and the price of these other crypto assets will get impacted. It just has to get impacted. And people are saying, look, it's got no effect. Money stays in stable coins once it's in stable coins. Like someone buys USDC, someone buys Tether, it's just going to sit in Tether or USDC. And I think that is dead wrong. I think it was actually this Matt Hogan tweet as well. This morning I saw it too. He said, I can't stop thinking about this quote from U.S. Secretary of Treasury Scott Besson. He said, quote, "We are going to keep the U.S. the dominant reserve currency in the world. We will use stablecoins to do that." And Matt says, however big you think stablecoin AUM will get, you're probably thinking too small. So then the question becomes, what does the rest of the crypto market look like if stablecoin AUM becomes multiple trillions? That's the story right now. We go from 230 billion to $1 trillion in stables. What does that do to the crypto market?
Okay, so I think it's very difficult to reason it's difficult to reason in the short to midterm about how stablecoin inflows impact the L1 token price. But here's one way that I would think about this probably. I think there are two takeaways, at least for me, is it helps, at least for me, to imagine everything, including TradFi, as different L1s, right? And what I would say is the more, like, imagine TradFi is one big L1 where stablecoins are, interoperable amongst that security zone kind of. Imagine Solana is a big L1, Ethereum is a big L1, etc. If you're Ethereum, Solana, TradFi, wherever you keep your US dollar, if it's USDC or if it's USD in the real world or whatever, you're more likely to buy assets where you have on whatever L1 you're on, right? So marginally, right? Like, and imagine this, right? Like if there are crypto natives listening to this, if I have, 100 grand on a Phantom wallet or 100 grand on MetaMask, there's a lot of friction to moving in between, these two L1s even today. So generally, I would imagine as the amount of stable coins issued on Ethereum or Solana grow, there's just going to be more buying activity because you've already got your money over there. And so I'm mostly going to buy stuff on just Solana or Ethereum or wherever those assets are. So that's generally one way to think about it over time is the more stable coins you have, the more volume that's going to translate to in exchanges on whatever platform you're on. But the other thing that it does is I think it's going to make people question this idea of, there's always there's two forms of value for these L1 tokens in general. It's like, is it the moneyness thing and it's valuable because you stake it places and you use it as money, or is it valuable because it generates fees? I think people are going to this is going to force people to, it's going to be fees, because if people want to hold stable coins over the L1, then you have to, the only way you can make this trickle down into L1 value is the fees from moving those stable coins around that stable issuers have to pay to the L1 or the L2 or whatever the chain is that's acting as settlement here. So I kind of think that I sort of think that this is going to kill this is valuable because I hold it and lock it up and stake it, and the kind of the TVL based argument for value accrual for L1, it's got to be fees.
Yeah. That reminds me, there was the just getting back to some of these takeaways, there was a Seth Gins tweet. Let me pull this up. He said, every protocol conversation at DAS has led to the same has led to a discussion of token value capture, so important for fundamental investing and fully enabled by the new administration's positive crypto stance. This becomes the conversation. So
yep, I agree. The Reverend, shout out Dan Smith,
the Reverend
did a really great talk on this. Kicked off day 3 talking about token value accrual as well. So I'd highly recommend people go watch that as well.
Good chat.
And just one final thing on the regulatory front: these two landmark bills here, which is the Genius Stablecoin Act and the Market Structure Bill, people are waiting until these actually pass. This is how the institutional world works. It's not like, oh, we think this is going to pass, good vibes, like let's. We have to wait until these things actually get passed. Like the slightly more, on the slightly less positive side, there are a lot of institutions which are excited. There's still not a ton of money that's moving on chain and buying a lot of these assets. And I think what's holding everyone up is the Stablecoin Act and the FIT Market Structure Bill. The Stablecoin Act, I agree with you, I think is mostly finished and we'll get within the next 3 months or so. The Market Structure Bill, there's a lot more open questions on. And it's going to be thornier because it really, really impacts everyone in the industry. Right? The TLDR high level is what's a security and what's a commodity. And there's going to be a lot of very spirited back and forth because, man, does that impact everyone in a really big way. So that is still a TBD, has to get figured out.
Agreed. What other takeaways you got?
I think those were pretty much the big ones. I think, one other thing that, so on that Cindy tweet, she described, I think something that's getting figured out here as well is how permissioned, TradFi is a very KYC'd permissioned world. DeFi historically has been non-KYC'd and permissionless. And there's a big question around how are these things going to interact. And the early iterations and tries of this did not work very well. And I think we're going to get more specific around what parts specifically of, like, where do we need the permissions exactly? And I'll give you an example of Aave. So Aave rolled out Aave Arc at the end of like 2022 era, and everyone had to KYC, right? The borrowers and the lenders. But now this new Horizon product from Avara is, if you're bringing you have to KYC if you are bringing like an RWA, but then you borrow in permissionless stablecoins. So there's a difference there in terms of who has to actually KYC and where those permissions exist. And so I think by making small iterations there, we can actually start to bring DeFi and RWAs together And so there's still a lot of work there, but I think work is being done on who needs to KYC exactly, at what level do we need permissions, et cetera, to make these two worlds come closer together. So still questions there, but I think it feels like there's progress.
Big breaking news right now. OFAC, U.S. Department of Treasury, Tornado Cash delisting. Based on the administration's review of the novel legal and policy issues. Hold on, let me just skip to the important part of this. We have exercised our discretion to remove the economic sanctions against Tornado Cash. Wow.
Yeah.
OFAC has removed Tornado Cash addresses from its STN list.
Wow.
That's big.
Okay, let's end on this. There was a really great quote or a very long series of takeaways from Jeff Park. And this is, so Jeff is over at Bitwise, and he's got this long takeaway, my state of crypto thoughts from DAS Convos. And I'm not going to summarize this because it's very long. We can link it in the show notes. It's a really great tweet, but the TLDR is everyone's very excited about the structural macro opportunity in crypto, Bitcoin and stablecoins, venture equity companies that are servicing this area. It's unstoppable cheering for these trends, and it's very refreshing to have policy on our side. And this is where I'm going to start to quote him. Yet I also couldn't help but sense that this might be a mission critical moment for the crypto industry to reassert its values for the new entrants and stand tall, unswayed by the known incentives of Wall Street capitalism and government's self-preserving inertia, which eats up so many truly radical dreams. And man, first of all, very well worded, Jeff, poet. But I agree with him. Like this is there is a part of crypto which is a tech upgrade, but there's also very different culture and set of values. And so that's where the rubber is really going to meet the road here on, are we just rebuilding the same thing with a slight tech upgrade, or are we meaningfully differentiated in terms of the value proposition and the set of values? And I think a huge challenge for this industry is going to be privacy and like KYC, right? Because one set of value, I could make this argument on the left here, which is KYC is a failed experiment. It mostly is just is administrative overhead on retail, because anyone who's sophisticated can trivially evade KYC programs and they don't really work. And it's a surveillance state tool and all that kind of stuff. Or I could say, look, guys, at the end of the day, governments have to deal with pedophiles and human traffickers and terrorists. And these function, like, we are not going to let these people just use our rails. And it's been interesting to watch the industry's response to North Korea right after the Bybit hack.
Yeah.
A lot of this went through DeFi protocols, and even like industry stalwarts and people that really care about this stuff, like, guys, we got to be better. We cannot let crypto facilitate this type of activity. And so we all, as industry participants that care about the future of this space and the set of values that brought most of us here, we need to think about where the rubber is going to hit the road on this stuff. And there are probably going to have to be compromises on both sides, but I think not losing ourselves here and completely just bowing to the whole point of crypto is doing something new, right? So I think it's important to push where we can for privacy, for non-KYC, for being global from day one. All of that stuff is really important, and we should not lose that in the excitement that these institutions and all of the money and success that's going to bring is, we don't want to get changed too much here, basically.
100%. Good call. Yeah, that was again, this dinner last night, keep mentioning it, but that became one of the biggest conversation topics. Was North Korea is a way bigger issue than anybody thought. We are going to have to do some sort of KYC stuff.
Yep.
Yeah. Good event, buddy.
Yeah, this is a really good one. Appreciate you, dude. This is
how are we gonna we gotta do something even bigger than the president of the United States? What do we do?
We should get our dads. Do a little part.
Get the dads.
Joel and John. That would be actually quite a fireside. Yeah.
Epic.
We gotta bring them on a podcast one time.
We've got something bigger than the president. We got the dads. We have permissionless. Permissionless is coming up June 24th through 26th in Brooklyn. And then there's 2 days of a hackathon, the 2 days before that. And then we have another DAS London, much more focus on the European audience, and actually the Asian audience usually comes out big for that one too. So DAS London is October 13th through 15th.
Yep.
Right? I think those are the dates. Permissionless is 24th through 26th. Are you frantically looking up the London dates right now?
I was looking them up. I just nodded as if those were the right dates.
Yeah, I saw that.
So double check us. I
saw that.
Julie's shaking her head.
Yeah.
All right, buddy. This was a fun one. And hopefully we'll see you all at Permissionless in Brooklyn in June.
See you at Permissionless. Thanks, folks. Appreciate you guys coming to DAS.